Credit, hands down, is one of the most important factors for getting a VA home loan. Yes, the VA doesn't have a minimum credit score, but lenders do. And remember, the higher your credit score is, the better financing terms you get. So we're going to kind of break that down in today's video, right? Credit, which is what lenders use to determine if you're going to pay back a loan or not, it has a range, and they use a FICO score. It has a range of 800 to 850, right? So no matter what spectrum you are between that 300 and 850, there's always room for improvement. And no, I've never seen someone's credit report that was 850. I think the highest I've ever seen was about 830. So again, there's always room for improvement. And about 67% of Americans have a good FICO score that would be considered 670 or higher. Now, for lending purposes, typically anything over 740 doesn't have a better credit score or better interest rate, but it's also important to strive as high as you can go because good credit offers the cheapest financing terms versus, let's say, being under the 680, you're going to pay higher interest rate and higher fees for the same product, which is unfair. But at the same time, it's how banks look at risk. Don't shoot the messenger. Now, there's 5 factors, that was 10 right there. 5 factors that determine your credit score. It's going to be your payment history, the amount of money that is owed on that credit, any new credit that you take out, how long you've had credit for, and what that credit mix looks like. So let me break down some of these things, right? So payment history is going to show how, if you made all your time on payments, right? And it's also going to look how you make your payments. Do you make the minimum payment only? Are you making extra payments? Are you paying it down faster than another person with the same credit profile? Those things are going to help improve your score. It's also going to look at the amount that's owed, which is really going to be your utilization rate. And what I mean by that is that if you have a $10,000 credit card limit and you've maxed out at $10,000, well, your credit score is going to take a major hit. So you can have, in theory, perfect payments, great history on the card, but your credit card is constantly maxed out, then your credit score is not going to improve and you're not going to have a higher credit score. Now, versus, let's say the same person with only one credit card has a $1,200 balance on their card, is going to have a much higher credit score because they've learned how to manage their credit, and that credit is being reflected in their credit score. Hence, that's why we have the score, and they look at the data as a whole, right? So that's why not one thing is going to make it like, oh, I've been paying all my bills on time, but your credit cards are mixed out. The other part's going to be how often do you take out new credit, right? So if you're taking out a new credit card every week, that's going to have a big impact on your credit score. And at some point, you're just going to get denied because you have too much credit that's available to you for the income that you have. The length of history is important to understand too, because, there's Vantage score and there's like the FICO score, right? Vantage score, which is something you would see like with your like the Credit Karmas of the world, your credit cards, they actually give you better credit earlier on in the process versus FICO, which they're going to actually want to see a longer credit history to determine that, yes, you are a credit-worthy borrower. And then the last piece is going to be your credit mix. Do you have like an installment loan, credit card, a mortgage? They're kind of looking for a diverse mix of the type of credit you have to determine that, again, you can pay back your bills, which any lender wants to be able to see. And again, that's what determines risk. So let's talk about improving your credit score, right? There's always room to improve how your credit is going to be coming through to on the lending side and to the 3 credit bureaus. The first thing you want to do is review your credit report. You can go to annualcreditreport.com and get a free credit report, a full one of all your information that's on there. It's important to note because you can still go to the 3 credit bureaus, right? TransUnion, Equifax, and Experian. I highly encourage doing credit monitoring so you have up-to-date information on your credit report. We'll talk to people and they haven't looked at their credit report for years, which I think is a huge mistake, especially in the credit fraud environment that we're in. And also, if you're not actively seeking new credit, I highly encourage you to freeze your credit report. with all 3 credit bureaus. Meaning, so like, let's say what will happen to us sometimes. We'll request, client wants to get a home loan, VA home loan. We'll look at the credit score and it'll say locked. Please contact the borrower to unlock their credit scores. So again, these are things that are easily doable and they don't cost you any money, and it saves you just time. Or if you ever have a fraud situation happen, or an attempt, this will stop that. Also, you want to check for any errors in your credit report and dispute any inaccuracies, because that's what might be driving the credit score to go down. We see it all the time, and in fact, it's even happened to me. Another thing you want to make sure you manage is the balances. You want to keep them as low as possible. Now, look, if you got into some type of financial hardship, you maxed out some of your credit cards, well, now it's time to come up with a plan to do that. And we have other videos out there talking about budgeting and really how to get down to a game plan. But it really comes down to collecting all your bills, budgeting, and then coming up with an attack plan on how you want to pay those different credit cards off. When it comes to making your on-time payments, the one thing that I'm a big fan of is having a calendar reminder. I use a calendar religiously, otherwise I would never remember anything. This also includes, like, when you set up auto payments, let's say this, I do trust that auto payments will go through. But when I make an auto payment, I will have it in my calendar to follow up 2 days later and check the account to make sure that it was paid. Too often I hear horror stories from clients where they have a late payment on their credit report and it was due to a bank, let's say that there's some activity in your bank account. They might freeze making payments on your account because of fraud. And that can then cause you to be late. And guess what? There's nothing that you can do about that for them to undo that late once it's there, unless it's a legitimate mistake where the credit card company applied your payment to another card. That's really the only time that is going to happen. So again, those are things that you want to think about. And especially like any future plans for major purchases, you want to get your credit in order. So that's kind of like your long-term credit health, right? You always want to maintain good financial habits. You don't want to relapse if you've had some tough times into having lates on your credit report, collections. It's better to make the minimum payment than to miss a payment, okay? The credit utilization, yes, you want to pay that down, but that you can always pay down at any point. Once you have a late, that late's going to be on there for 7 years, and then it's going to fall off. Yes, it doesn't have an impact on you immediately. It will have a large impact. On average, it drops your credit score about 70 points. So those are things that you want to consider when making your payments. Hope you guys liked the video. Hit the like and subscribe button, and I'll catch you guys soon.